Good morning, everyone, and welcome to Thursday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, stock index futures are very quiet right now. The market is waiting for some huge numbers at 8:30. The other day we got the consumer price index, and the market shot higher. This morning we're going to get the producer price index and jobless claims, and so it'll be quite exciting to see how the market reacts to those numbers on Thursday morning. Well, what do you know? Cannabis stocks led the way once again on Wednesday. There's the Alternative Harvest ETF up over 13% on Wednesday. We had Aurora Cannabis, Tilray, and Canopy Growth all up on the day. Now, looking at Bitcoin and Ethereum, they're both coming up to our next target. So 125 for Bitcoin and $5,000 for Ethereum. We may be able to hit both of those on Thursday. Then looking at the VIX moved slightly lower yesterday. It's still on a sell signal, which is supportive for higher stock prices. Things would change for the VIX if we closed above 1729 on Thursday. Looking at a couple of the major index ETFs, there's the iShares, the TSX 60, and the Vanguard Canada ETF, both making new highs yesterday. Now, what worked? Well, it was consumer discretionary stocks followed by telecoms, the real estate sector. Those were the big winners on the TSX on Thursday. Year to date, it's Lundin up over 156% year to date, and then SSR Mining up over 124% year to date. Now, I was talking to one of our subscribers yesterday about just how many stocks are not performing well as the major indices hit new all-time highs. And it's pretty easy if you just scan through the Dow 30, for example. There's the Dow diamonds coming up and trying to break out to new all-time highs. You can see in July, we were not able to hit our next price target of 453.13. That, of course, is a daily and a weekly target. If we can take out that, then our next weekly target is 468.75. Now, when we go through the stocks in the Dow, there's a high percentage that are still in the doghouse. Now, Apple recently broke out of the flypaper channel, so Apple is not on the list of broken stocks anymore. But there's Amgen. We've got Salesforce, which I thought Salesforce was really embracing AI, and that was going to help them a lot, but apparently not. We're trying to hold the lows from back in April. Then we've got Dow, and Dow's been in the doghouse all year, so no change in expectations there. Then we've got Home Depot starting to trade below the flypaper channel. Then we've got IBM, which broke down a couple of weeks ago and has found no joy since gapping lower. Then we've got Coca-Cola. Coca-Cola is not a stock I'd ever want to trade. The average true range is just 1.32%. You can see how wide the flypaper channel is. That's the first sign that it's a very slow-moving object. Here it's just treading water in the flypaper channel right now. Then we've got McDonald's. McDonald's is stuck in the flypaper channel as well. Again, another stock I really wouldn't trade. I would certainly trade this stock. This is Merck, and Merck, unfortunately, has been in the doghouse all year, so no change there. We've got Procter and Gamble down at the bottom of the flypaper channel, so another stock in the doghouse. Then, of course, United Healthcare, which has had a terrible year, and nothing has changed. Possibly a short-term buying opportunity here, but my expectations for the stock, of course, would be very, very low. Then you've got Visa in the doghouse at the moment, and you've got Verizon in the doghouse. So there's 12 stocks out of 30 that are in the doghouse while the index is trying to make new all-time highs. Now, what's working? Well, we've got Goldman Sachs, we've got Johnson and Johnson, JP Morgan, and then here's a couple of stocks we look at all the time. We've got Microsoft and Nvidia. Those two stocks are really helping to hold the Dow up near new all-time highs, and of course, they've done wonders for the Nasdaq 100 and the S&P 500 in 2025. Now, for Nvidia, we're still trying to get to our next price target of 187.50. If we can take that out, then $200 would certainly come into play. When I'm showing price target charts, what I always talk about is the playing field, which is 2 lines up or 2 lines down. And so if you are going to play the options market, those are the options you should be looking at. Of course, if you're selling options, then of course you want to be outside of that range. You want to be selling at 212.50s or 225s or down here For the puts, you want to be selling 150s or 137.50s or numbers in that area. You don't want to be selling puts within the 2-line range, and of course, or selling calls or puts within the 2-line range, because mathematically there's a very good possibility that those strike prices can get hit in a very short period of time. Okay, folks, that is all for this morning's presentation. Of course, I'm doing this ahead of those big numbers coming out at 8:30. And you know what the market gave us the other day with the CPI numbers, maybe it'll take that away with the PPI numbers. We'll just have to wait and see. Okay, folks, thank you very much for your time and attention. Next time you'll hear my voice is on Friday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.